stocks trade range despite some positive news on the earnings front as the global picture looks cloudy, while metals and energy slip.
All right. Well, Bajaj Auto beats street expectations with continued margin expansion, and Tata Consumer grows ahead of estimates, but the stock sees muted moves after their recent run-up.
Gujarat unveils a policy for payment of dividends, issue of bonus shares and buybacks by the state's listed entities to reward shareholders and improve valuations. But there could be some hiccups in execution.
An AU Small Finance Bank slips on concerns over margins shrinking and a reallocation of areas by the gas regulator hurts IGL. But Mahindra CIE gains after posting record margins on the back of strong growth.
Hello and welcome. You're watching us here on Halftime Report. It's halfway through the trading session. Not much has happened at the index level. The Nifty has been hovering around the flat line with a mild negative bias at some points and now, mildly higher above the flat line right now. A couple of stocks doing extremely well. We have L&T, which has moved to the high point of trade, and that's an index heavyweight, so that's supporting the index. Some sort of recovery seen from the lows on the IT pack as well, but then you have some pressure coming in on a couple of these banking names and a bunch of these metal names as well. So Kotak Mahindra Bank, for instance, at the low point of trade. Hindalco is at the low point of trade as well, and ahead of numbers, Bajaj Finance not doing too well. Hi Ekta, hi Sonia.
Hi, it's quiet, but the good part is that the market at least is trying to sort of build onto its gains, right? I mean, it's holding on to the green line for now. The Bank Nifty just about holding on to the flat line, but lots of big cues to watch out for over the next couple of hours. You have Maruti's earnings, and ahead of the earnings, stock is looking good, but so many smaller numbers as well. There's KPIT Tech, from the larger guys, as Bajaj Finance, we were mentioning that. So all in all, looks like it's going to be an action-packed day.
Well, absolutely. I was just looking at the smaller companies which will be reporting numbers like you said. So it is a whole host of companies that will be coming out in the next couple of days. For, for today, for example, there'll be the likes of even Syngene, Shoppers Stop, Voltas, which the street will be looking out for. And tomorrow, besides the Axis Banks and the HULs of the world, as well as the Wipros and the Tech Ms, you will have LTI, Mindtree, Emphasis after the broader market IT stocks, which have been relatively better than the front line. So there will be a stark comparison, which will probably come through. And even something like a Loris Labs, which will be reporting its numbers to kick off the entire API space. So that is something that the street will look out for. So those are a couple of cues to watch out for. But nonetheless, let's get talking about numbers. It was a steady quarter in terms of Elecon Engineering, recording what was a good growth across all parameters. The company saw a solid growth in revenue across segments, with the material handling equipments registering a healthy 55% jump. As per the analyst presentation, the company has given an FY24 guidance at 1,700 crores. We have with us Mr. Patel, who's the chairman and the MD of Elecon Engineering, joining in to discuss their details on the Q4 performance, as well as what FY24 is looking like. Mr. Patel, thank you very much for joining in. Well, it's definitely a strong quarter because your revenue is up around 28%, your net profit is up around 47% on a year-on-year basis. Can you just give us a sense in terms of how exactly the industrial gears segment panned out and what were the margins this time?
Last quarter, we did a growth of about 24% compared to the previous year in the gear business. And overall, for the whole year, we did an increase of about 22% compared to last year.
Right. What about, the outlook for the next year? I mean, in some analyst meet, you said that you would do about 2,000 crores in terms of revenue for the next year. And in your uploaded PowerPoint presentation, you've said you'll do about 1,700 crores. So just wanted some clarity on that. And in terms of order inflow, what are you targeting in FY24?
Yes, we put up a tall target of 2,000 crores. Confident of achieving somewhere between 1,700 onwards. It will all depend on how the economy and how the monsoon turns out to be. But we are expected to do anywhere between 1,700 to 2,000. Okay, and out of which material handling would be 300 crores additional. So if it is 1,700 crores for gears, it would be 300 crores for material handling business.
Okay. And 300 crores for the material handling business, you said, and this is for FY24. What kind of compounded growth do you think you can do in the business overall?
Overall, it would be approximately 25%.
25% on the top line is what you're looking at, and on the margins, 22% is what you had guided for in FY24. Is that something that you can maintain on a compounded basis as well?
Definitely so.
Okay. Mr. Patel, I just wanted to come back to what you mentioned with regards to your guidance. The fact that you're assuming that you're going to achieve between 1,700 to 2,000 odd crores. But are you facing any kind of headwinds considering that you've scaled down from 2,000 to 1,700 crores? Yes, you're assuming that you'll hit the range. But the fact is that are you seeing any kind of headwinds to have probably revised it to 1,700 versus 2,000?
Not at all. As a matter of fact, we are very gung-ho about the future. It is only that depending upon the monsoon and how the economy, the inflow of orders turn out to be, it will depend basically on that.
So you're optimistically cautious.
We are also very strong on exports because from our 30% of our turnover coming from exports, we want to increase it to almost 40% in the coming year.
All right. And, you preempted my next question, which was on exports. But since you said that you are hoping for some order inflows, can you reiterate what kind of order inflow are you targeting in FY24? Because as we see, your current order book is, closer to 714 crores, MHE being about 150 crores and gear segment around 569 crores. If you could tell us what is the order inflow that you're targeting in FY24 and specifically give us some details on any business that may come from the Navy segment.
Yes, we already have an order worth about approximately 70 crores from the Indian Navy. And we are hopeful that by the end of the year, we would get some more orders because there are a few inquiries on hand, which has into orders.
So what would the number look like? Just on an average, if you can share with us from the Navy.
We have a lot of inquiries on hand. It would be very difficult to conceptualize what would materialize. It will depend on their priorities rather than ours.
And the overall order inflow, you said, how much are you targeting in the next year?
Overall, we expect that gears will be 1,500 crores and material handling will be around additional 300 crores.
So can you just tell us, out of this overall figure, what would the opportunity be in, say, ethanol, in the ethanol space?
We believe that ethanol would be a game changer further because the investments that are likely to come in are supposed to be quite large. And since we are a dominant player in the sugar industry, as long as transmission solutions are concerned, we would definitely have a lion's share in it.
Can you put some numbers to that? What did you close FY23 with and what might it be in FY24?
Right now, we have 30 crores coming in from the sugar industry, which are the orders on it. We expect to do about approximately 50 crores by the end of the year, not considering the opportunities which are there, especially in the ethanol sector.
Okay, based on what you're telling us, Mr. Patel, it seems as though you have a lot of opportunities from the domestic market, defense, ethanol. Can you break up the growth rate that you're expecting between domestic and export going into FY24? While you want to increase your export share, what is the growth rate that you expect between the two markets? Which one are you more bullish on? Which one would you probably put more energy and focus on?
Right now, we believe that exports would have a growth which would go to about 20% overall. The domestic market is the market which is today growing at a much faster rate. As we all know, India is growing much faster than the rest of the world, and therefore there are great opportunities even locally. However, the future lies in exports, and therefore we are putting a maximum thrust in exports.
All right. Just finally, before we let you go, you had arbitration, claims of close around 60 crores earlier, of which you've settled 30 crores worth arbitration claims. Some money will come to you in the first half of this year. 30 crores, which is under negotiation. When do you expect some clarity on that?
It is difficult to come to a conclusion as long as these are concerned, because it all depend on the arbitration and whether the companies are contesting against us, whether they take it up further in the court of law.
Okay, all right. We'll let you go on that note. Thanks a lot for joining in. That's Elecon Engineering, but very, very flat markets on our hand. Let's slip into a short break. On the other side, we'll connect with Amit Sareen, who's the CEO and Director of Anand Raj Industries, to decode their Q4 numbers. Stay tuned.
Yes. Quiet! It's okay for us to nod for everything, because we are parrots. But your wealth manager? Shouldn't be doing that. You know? No? Oh.
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
कमाल की कार है ना सर। कमाल की कार के लिए कमाल का पेट्रोल भी चाहिए, एकदम टॉप का, जो हमारे इंडिया में मिलता कहाँ है।
अरे सर, प्रीमियम कार्स के लिए इंडियन ऑयल ने बनाया है 100 ऑक्टेन वाला देश का सबसे प्रीमियम पेट्रोल, XP 100। इंडियन ऑयल, पहले इंडियन फिर ऑयल।
Mankind Pharma Limited now makes an initial public offer of equity shares of face value 1 rupee each for cash at a premium. The 100% book-built offer being offered in a price band of 1,026 rupees to 1,080 rupees per equity share. Opens on 25th April 2023 and closes on 27th April 2023. For risk factors and more details, refer to the red herring prospectus.
100% happiness with SBI Home Loans. Zero processing fee at 8.50% onwards. Apply today. Call 1800112018. Visit homeloans.sbi.
I am heat.
Blue Star Inverter AC with fast cool technology. Bye bye heat. Blue Star.
अभी तक मटेरियल आए नहीं, पैसे नहीं है। अच्छा।
यूप्रो कैपिटल का ग्रोएक्स ऐप है ना, अब आपको भी मिल सकती है नॉन स्टॉप बिजनेस करने की आजादी।
इतनी जल्दी?
Welcome back. It is earnings season, so let's get chatting with another corporate on our radar right now. We have Anand Raj Industries. Reported a good set of earnings with a solid growth of almost 24% in their revenues. We did see the company's net profit increase by about 13.5% as well. The stock doing half decently with a gain of about half odd percent. We have with us Amit Sareen, who's the MD of the company, joining in now. Thanks a lot, Amit, for joining in. For real estate companies, it isn't really the reported numbers that matter. It's the bookings and collections that matter over a period of time, and also the strength of the balance sheet. Let's start with that itself. Your net debt as of now, as we look at your balance sheet, is close to around 830 odd crores. It has halved from 1600 crore levels earlier. When do you intend to be net debt free by, and what's the roadmap there?
If you see the rate of the company, if you see the turnover, our turnover last year was 250, last year was 500, and this year we've crossed 1,000. In fact, the exact turnover is 1,004. And the profit this year has gone up 3 times. We have closed at a profit of 151 crores against 54 crores, which we had done last year. So, and whatever liquidity is coming into the company is going for majorly 2 basic things: reduction of debt and the data center business, which the company is now focusing on. So the debt, as you see, has gone to half in less than 2 years. And I think by the next 2 years, we should be going back to a zero debt company, which Anand Raj originally was in 2012.
So by FY25 is what you're saying, in the next 2 years. So is that your deadline? Because earlier I think you had mentioned FY24, I think, that you would become debt-free.
Sonia, definitely before that, but just keeping a buffer in for a few months. But definitely before that, yes.
Okay, that's on the debt. I just want to question you also on the demand. Can you tell us what percentage of your business comes from the premium end? And I mean, what is the unsold inventory in the premium end of the business? And are you seeing a big pickup in demand over there? Because we've got signs of, really strong demand, especially from the likes of DLF, Godrej, etc.
Definitely, Sonia. Our main focus right now is a very prime sector, which we are focusing on is the Sector 63A, where we have this township in which we've been working for the past 10 years. It's called Anand Raj Estates. And the last 2 years, as we all know that after COVID, the way the real estate demand has come back, especially in Gurgaon area. And we are right next to where DLF has launched their project, which is doing very well. So we are getting all the benefits which we can from that launch also. Plus, in our sector, we have a joint venture with Birlas, which is called Navya Birla, which is a joint venture between Anand Raj Limited and Birla Estates. That is doing well. In this sector itself, we last year on the birthday of our founder chairman, we launched Ashok Estates, which is a part of Anand Raj Estates, which is the main contributor for our revenue this year. So these three things put together, that's what helped us cross turnover, double our turnover, and from 500 a straight jump to 1,000. So right now we are in the premium segment. We still have a very decent inventory for us for the next, we are within this sector, we are sorted for the next 5 to 6 years. So we are focusing here, and this is what is going to help us reduce our debt.
Okay. Your data center is what I'm more interested in, because you have 3 projects which are coming up in the data center. That's what you've indicated in your presentation. How much did you make in terms of money from your data center projects this quarter? And what are you projecting going into FY24?
See, I'll tell you, data centers, a company is sitting on 3 ready assets, which are meant for data centers. For the first asset, which is in Manesar, where we have our first 3 megawatts up and running now. In fact, that only started in March. So the revenues from data centers are going to kick in from this financial year. So, and the company has invested close to 140 crores in this business for its first setup. The first approval we have is for 21 megawatts, which is already there with us. We have 2 tie-ups, one with TCIL, one with RailTel to get clients. We are already on it now. So Manesar is now up and running. The 21 megawatts is going to be up and running this year. And the total capacity of Manesar alone is about 50 megawatts. So the company has done with the strengthening part of this. And now the execution of, we are going up to the rack. So the 3 megawatts racks are already there, and our servers have started to come in. So revenues will start coming in from this financial year.
How much does one generate typically from 1 megawatt? I'm just trying to understand, the monetization.
Mangalam, the generation from 1 megawatt is close to anything between 85 to 90 lakhs per megawatt per month.
Okay. Just wanted to understand a couple of things, with regards to your business itself. Your Apollo deal, I mean, you had a deal with them, to get 2,000 crores via debentures. They've given you the first tranche of 200 odd crores. When do the next tranches come? And you intend to be debt-free, but debentures is also, classified as debt itself. So just wanted to understand this.
No, I totally agree. I'll totally agree with you. See, the deal with Apollo, this is Apollo US, as you know. So this is a beginning of a very big relationship with them, and it had to start somewhere. So what we did was we took this and we repaid our previous debt. So our relationship with Apollo has kicked in. In fact, we today are sitting on a sanction which we are not availing of, and it is only going to be done if we need the money. As you know that the company last year has invested close to 140 crores in this data center business, all from internal sources. In spite of that, the debt has gone down. So you know why, Sonia, I took the extra few months we have taken is basically because the data center we don't want to stop at any point. And as now we see a very robust demand in data centers, in the coming few months. And as you know, we are one of the first ones in North India to kick into this business, and we've been working on this since 2019. And now we are very, happy that the first tranche is the first segment is first phase, is already up and running, and the next will follow. Right now we have 3. This 3 will go to 6 by September.
Okay, so 6...
and all from internal sources, not using any debt from anywhere.
Okay, and can you tell us another opportunity maybe could be in the commercial segment for you? Because you spoke about data centers, spoke about residential, but on the commercial side, over the next 2 to 3 years, what would you be looking at?
So yeah, commercial is now picking up, and our rents have gone up by about 15% in the last financial year. So we see decent demand in commercial, but the residential demand is phenomenal. So commercial, we still have a lot of ready space, which we are going to first fill up and then move on to further doing commercial.
Okay. And how much is the ready space that you have?
Right now, we are close to almost about 3 million of ready space, but a part of this 3 million will now move towards data centers.
Okay, Amit, just before we let you go, in August 2022, there was a rating agency report, I think Infomerics, which had migrated your rating to issuer not cooperating due to non-submission of information. Can you just clarify what exactly happened there? Has that issue been solved? What are your current ratings from rating agencies, and who exactly
That
has
was a
rated you?
technical, see, I'll tell you, that was a technical issue. As you know, that Anand Raj Limited went through a demerger, and this demerger was approved by the Honorable NCLT in the August 2020. So after that, everything got sorted. This non-cooperation thing was done for the financial year 2017-18. That is the time when the demerger was going on, demerger, was because of the demerger this happened. And now, once the demerger got behind us, we have already furnished whatever information we had to. And in fact, we are now in talks with the rating agencies. And I think in the next few months, you will see the new rating coming up.
Okay, all right. So that issue stands clarified. Amit, thank you very much for joining in and speaking with us. So
Thank you.
Anand
Thank you very
Raj
much.
talking about a whole host of projects that they have coming on stream. We need to take a short break now, but we'll get you more on the markets. A lot of stocks in focus, especially on account of earnings. All that on the other side. Stay tuned.
Hey, buddy. Hope you liked them.
Introducing Apollo Alpha. Add more thrill to your beast.
When our big boss was MD, he used to take care of us.
And our Prince Sahab is busy ensuring his family. Oh, big boss, you?
He's busy obtaining term insurance for his family. After all, office is also our family. Am I right?
Let's close the deal.
Thank you.
Verma ji, will you have tea with this prince?
LIC's Group Term Assurance Plan takes care of your office family.
Z-Block Premium Agarbatti and Dhoop. Official prayer partner, Delhi Capitals.
A. Balasubramanian decodes the investment space for retail investors and draws out the do's and don'ts on how to grow wealth by goal-based investing through mutual funds. Watch all this and more on Mutual Funds Sahi Hai. Give wings to your savings in association with News 18 Network at these times.
गुणवत्ता की बात चली है, एक नई शुरुआत मिली है, परिवर्तन को गले लगाकर अपनाएंगे Z। प्रोडक्शन भरपूर बढ़ेगा, प्रॉफिट भी अब खूब चढ़ेगा, काम को नई दिशा दिखाकर अपनाएंगे Z। चलो देश का रूप निखारें, पर्यावरण को हम ही संवारें, प्रदूषण से बचाने को अपनाएंगे।
Register with Ministry of MSME's set certification scheme today and help India become a global manufacturing hub.
कैसे करते हैं ट्रेड? Drive 5 पैसा। Upcoming corporate action या news flow, किसका हुआ merger, कौन है नया CEO?
Financial data मिलेगा अब हाथों हाथ, fundamental analysis से अब बनेगी बात।
जानो हर stock जो है trendy, technical analysis से भी लगेगी friendly, quarterly results होगी send, luck by chance investing का होगा the end.
With 5 पैसा's in-depth company information, always stay up to date.
ऐसे करते हैं trade.
सोच मत छोटे, install मत. Investment in securities market are subject to market risk. Read all related documents carefully before investing.
Welcome back. Well, it is definitely a quiet day on the index, as it has been for many trading sessions now. But there's a lot happening in terms of stocks. And the big story that we're tracking today, this morning on Halftime Report, is that the Gujarat PSU stocks have surged in trade after the state has announced a new policy for minimum dividend distribution and bonus issues. Sona joins in with details on the story that she's been tracking very closely. Sona.
Thank you so much for that. Well, first of all, the story that Gujarat government, they have gone ahead and laid out some policies as to what the state-owned PSUs would do in terms of rewarding the shareholders. This is the minimum levels of dividend distribution and bonus shares as well. So first, with the dividend, where they will be allowed to pay, or they'll be asked to pay minimum of 30% of PAT or 5% of their net worth, whichever is higher, as dividend to the shareholders. It has to be between the range of the minimum and maximum dividend they can pay out to the shareholders. In terms of buyback, a PSU that has a net worth of at least 2,000 crore rupees and cash and bank balance of 1,000 crore rupees should go ahead and buy back some shares from the market. In terms of bonus shares, if a company has reserves and surplus equal to or more than 10 times of the paid up equity share capital of their company, in that case they should go ahead and issue bonus shares as well. And this is something which is applicable to all the 7 listed entities as well. Share split will be done if the market price or book value exceeds 50 times of its value as well. So there are 7 entities, of course, which are listed, the likes of GNFC, GSFC, Gujarat State Petronet Limited. The list will come up for you on the screen. All of them are higher in trade today. I just looked at some of these numbers on FY22 basis to see whether most of them can actually meet the criteria or not. Starting with Gujarat Gas, that has a FY22 profit of 1,300 crore rupees, net worth of 5,600 crore rupees, but cash is on the lower side. So they can pay 5% of net worth at 280 crore rupees, 30% of PAT at 386 crore rupees, which is the higher number, but lower cash right now. But going ahead, they expect higher cash in the books. GNFC will be able to meet criteria across because they have higher cash levels. They will be able to pay out dividend at those levels, and net worth is also higher, so they can actually go ahead and do a buyback. GSFC has cash of around 315 crore rupees. It has holdings in a lot of other listed Gujarat-based entities as well. They have a PAT number of around 900 crore rupees. Gujarat Alkalis and Chemicals, they will be able to pay 5% of net worth, which is 300 crore rupees, 30% of PAT, which is 168 crore rupees, and they do have cash in their books to the tune of 300 crore rupees. GSPL is the other one, after GMDC, of course. GMDC has cash of around 1,200 crore rupees. Even they will be able to go ahead and do a buyback because net worth is higher than 2,000 crore rupees and cash is higher than 1,000 crore rupees. For GSPL, if we look at that, they have a cash of 562 crore rupees. While they cannot go ahead and do a buyback, the dividend policy will be in favor of the shareholders. Just looking at some of the dividend payouts they have done, it's been between 9 to 13% across the board for all the companies that I just mentioned. So there will be improvement in some of them, and that is something maybe that the shareholders are liking. But important to note, not all of them have enough cash in their books, and not all of them can go ahead and do a buyback because the cash in books are not above that 1,000 crore mark. So yes, GNFC is the one where shareholders will benefit the most, because it actually sees criteria across the board. GMDC can go ahead and do a buyback like GNFC, and all the companies can actually go ahead and issue bonus shares according to the criteria.
All right, take that point. That explains why GSFC and GMDC, among all the others, are rallying the most. 15-16% sort of gains coming in there because they meet the criteria on both fronts, whereas the others may only be able to issue a bonus. Not big in terms of a shareholder, lucrative return to shareholders if it's just a bonus. Buybacks and dividend together benefit GNFC and GMDC the most. Thank you, Sonal, for that. With that, let's move on to another special offering today, Value Add. And in this, Sonia tells us about a bull versus bear case on Bajaj Auto. Sonia, numbers are doing well, but the stock has rallied already.
It has, and you know, there are both bulls and bears on the street, as there generally are. So we thought we'll just put it on board. The bull case is pretty straightforward. Morgan Stanley, Jefferies, Motilal Oswal are all bulls on the stock. They've, in fact, a lot of brokerages have raised their target price as well. So Morgan Stanley has raised it to 5,063. Jefferies has raised it to 5,100, while Motilal is neutral with a target price of 4,400. So here's the bull case. EBITDA margins are very strong. It's at a 9-quarter high, and the management mentioned that they will maintain these margins in the quarters to come. There are 3 catalysts for future growth. One, of course, is the Chetak EV ramp up, and that is looking pretty strong at the moment. The company is looking to ramp up the Chetak to 10,000 units of production per month. Currently, they retail around 5,000 or so. The Triumph product launch that happens on the 27th of June, that's the other big trigger. And the third is recovery in exports in FY24. And the management was quite confident that the worst of the export fall is now behind them. So that's the bull case. On the bear case, we have Citi and CLSA. Citi has a sell, although they have raised their target price to 4,000 rupees. And CLSA has downgraded the stock to an outperform from a buy, and they've raised their target price to 4,659 rupees. Now, the bear case is what's happening in the global markets and exports. So they say that there's unavailability of the US dollar, which is a key concern for export markets, especially markets like Nigeria. And volume recovery in the export markets, there's still uncertainty there. Although the management is confident, the timeline remains a bit uncertain. So those are that's the bull and the bear case on Bajaj Auto. You can take your pick. But the commentary that we got from the management was quite healthy, actually. The body language was positive. Rakesh Sharma, Executive Director, spoke about the margins being maintained around these levels and volumes picking up as well. Here's what he had to say.
Improvement in margins is really on account of three things. One is, of course, we've benefited from the gentle devaluation of the Indian rupee, though the export component has come down, but that's helpful. Then all the cost increases which we have faced, which are not too much, but there are some incidences of cost even on account of the changeover to things like OBD2, though it was very recent. But the approach has been to judicially pass these on. And the third factor has been actually the most significant one, which is the richer mix. We are now, 60% of our domestic business is in the 125cc plus segment. The three-wheeler business is done extremely well with a commanding market share of 78%, and CNG auto is one of our most profitable products. As you understand, the Bajaj Auto margin is a very complex thing, a lot of moving parts there. For instance, if suddenly see a surge in Africa exports, Africa is generally less than the average. But if we see a surge in the three-wheeler side in exports, then that is at a very handsome margin. So where the where the penny will exactly fall is difficult to say. But this is the point we'll be striving to maintain.
Okay, so that's the management of Bajaj Auto. Remember, the stock is very close to its 52-week high, so you need to put that into perspective. Maruti comes out with numbers today. That stock is managing to hold up in the green ahead of that. Time for a break now, but up next, Jay Thakkar will join in with his technical picks. Stay tuned.
Mankind Pharma Limited now makes an initial public offer of equity shares of face value 1 rupee each for cash at a premium. The 100% book-built offer being offered in a price band of 1,026 rupees to 1,080 rupees per equity share. Opens on 25th April 2023 and closes on 27th April 2023. For risk factors and more details, refer to the red herring prospectus.
तेरी रोशनी हूं मैं किसना
After the resounding success of India Inc. On the Move 2022 in Gurgaon, this year we're coming to Mumbai to explore how sustainable practices are the key to long-term success of the manufacturing industry. Get valuable insights from industry luminaries, experts and policymakers on how your business can prosper with this new paradigm for growth. Only at Forbes India and CNBC-TV18 present India Inc. On the Move, Sustainable Manufacturing, powered by Rockwell Automation.
कैसे करते हैं ट्रेड? Try 5 पैसा.
Powerful charts and research tool. One-click trade is the new cool. Get access to live market data.
Margin funding bhi hai re beta.
5 Paisa app karo install. Trading made simple, simple for all.
With 5 Paisa's wide range of products, yahan wahan chahe ho jahan. Simply trade on the go.
Aise karte hain trade.
Soch mat chote, install maar.
Investment in securities market are subject to market risk. Read all related documents carefully before investing.
Welcome back. You're watching us here at on Halftime Report. At halftime, the Nifty is done better now. It's consolidating around that 17,800 mark. It's picked up some pace in the last few minutes and currently moving to the high point of trade. We spoke about L&T doing well. Just add ICICI Bank to that as well, and HDFC Bank, the biggest weight on both the Nifty as well as the Nifty Bank from the financial end of things. So HDFC Bank moving higher has had its bearing on both these indices. The Nifty Bank now sitting with a gain of about 100 odd points. And, while the Nifty is around that 17,800 mark, remember it's the 750 to around 17,800 mark, the range in which the market has been consolidating. So it'll be interesting to see where it goes from here, mainly because it's expiry tomorrow. And ahead of that, the put-call ratio has moved to 1.2. Usually when the put-call ratio moves to 1.2 and crosses that, we see some sort of consolidation, maybe a bit of correction as well. The active options for tomorrow, 17,750 straddle writers are extremely active. 17,750 call and 17,750 put, both of them come up for you. And the available premium on both these strikes is a combined premium of close to around 100 odd rupees. So the option writers basically are eyeing a range of 17,650 at the lower level to 17,850 at the higher level. And there is technical basis for that as well. I mean, the 200-day moving average is at 17,625. Giving support to the fact that there could be some, bounce back from 17,650. And on the way up, the resistance is April closing high is 17,828, and the 100-day moving average comes in at 17,830 as well. So those are a couple of factors we'll be watching out for in the next day and a half. The mid-cap index is the index that you'll be watching out for right now, because the second half, it may move a little because it's the weekly options expiry for that index.
Okay, and maybe a lot of numbers to watch out for as well. Mangalam, thanks very much for that. Jay Thakkar joins in to tell us what he's strategizing midweek on the technicals for the market. Jay, hi, welcome to the show. Well, stock specific, is that more of a strategy now, considering that it's been quite quiet on the index?
Hi, very good afternoon to everyone. Absolutely, we are seeing good momentum in the stocks. The breadth overall is good. I would say there is a lot of short covering also, which is still pending in many of these stocks which we are seeing, and that is happening, is helping markets to basically sustain as well at the higher levels. So whatever profit booking at the higher levels or supply at the higher levels we are seeing is getting absorbed because we are seeing good buying interest coming in these stocks at the lower levels. Now, as far as the indices levels are concerned, I would say from tomorrow's weekly expiry point of view, 17,700 on Nifty will act as a very, very crucial support until those levels are held. The probability of Nifty inching towards 17,900 on an immediate basis is quite high. And technically, I would say Nifty is likely to head towards the levels of 18,000 to 18,100 till 17,700, 600 ranges held. Likewise, on the Bank Nifty, which has in fact relatively outperformed, 42,500 levels out there on a closing basis will act as a very crucial support. I would say till those levels are held, it can continue this upward momentum till the levels of 43,000 to 43,500. Hence, I think that stock specific activity further on the long side will continue. So I've got two buy recommendations. The first one is on Exide Industries, which has given a very good breakout from a falling wedge pattern. We have seen good short covering happening out here as well. The stock is trading around the levels of 193 on spot levels. I'm expecting target of around 197 to 202 on an immediate basis. That would be a short-term target, and one can place a stop loss at 189. The second buy recommendation would be on Chambal Fertilizers. Now, in past few days, we have seen this entire sector doing quite well. I mean, whether it is Chambal or maybe Coromandel. Thereafter, we saw some profit booking, but technically, Chambal has formed a nice inverse head and shoulders pattern, and it has now got a good support around the levels of 275. So with that as a stop loss, one can buy Chambal Fertilizers, targeting 293 to 300.
Appreciate your thoughts, Jay. Thanks as always for joining in. Plenty of other stocks to talk about, but perhaps we'll take that for another. We'll keep that for another day. Let's slip into a quick break. On the other side of the break, IPCA Laboratories is at a 3-year low. Remember, the street was very disappointed after the Unichem deal. Stay tuned for more on that.
पिछले 6 सालों से हर रोज यही हो रहा है। ये वो SIP है जो चौधरी साहब अपनी बेटी के लिए कर रहे हैं। जब जिंदगी जीने का तरीका ही SIP है, तो जिंदगी के लिए SIP क्यों ना हो?
An investor education initiative by HDFC Mutual Fund. म्यूचुअल फंड निवेश बाजार के जोखिमों के अधीन है। योजना से जुड़े सभी दस्तावेजों को ध्यान से पढ़ें।
Mankind Pharma Limited now makes an initial public offer of equity shares of face value 1 rupee each for cash at a premium. The 100% book-built offer being offered in a price band of 1,026 rupees to 1,080 rupees per equity share. Opens on 25th April 2023 and closes on 27th April 2023. For risk factors and more details, refer to the red herring prospectus.
गुणवत्ता की बात चली है, एक नई शुरुआत मिली है, परिवर्तन को गले लगाकर अपनाएंगे ज़ड। प्रोडक्शन भरपूर बढ़ेगा, प्रॉफिट भी अब खूब चढ़ेगा, काम को नई दिशा दिखाकर अपनाएंगे ज़ड।
Register with Ministry of MSME's Z certification scheme today.
This one's a turbo.
1.5? Nice. The all-new Hyundai Verna. Futuristic. Ferocious.
Welcome back to Halftime Report. So one of the stocks of the last many days has definitely been IPCA Laboratories. Now, if you remember, they had that deal with Unichem, and post the Unichem acquisition, the street was very disappointed. Looks like it's not over just yet, down another 7%. But what more are you picking up on this, Ikta?
Well, you know, yesterday the stock was down 10%. So the management held a conference call which took place post-markets at around 4 p.m. I did listen in to the conference call. A couple of important takeaways from that call was that they are estimating around 1,800 crores in terms of revenue and EBITDA of around 300 crores over the next 2 years from this particular acquisition. The company is going to work on factors such as new launches. They expect 10 new ANDAs, which is new drugs, to be launched over the next 12 to 15 months. They're increasing market share in existing products. They're expecting synergies. They're expecting to rationalize R&D. A shift from GST rebate process to GST refund, in fact, can unlock a amount worth 250 crores in Unichem. Plus, they have a land parcel in Mumbai, which can also be monetized. So these are, you know, deliverables over a course of time that the street would watch out for. The transaction is expected to be completed in 4 to 6 months. IPCA has no plans to increase its stake in Unichem post the open offer. Unichem has around 76 ANDAs totally, with around 54 approvals. Top 10 products, around 70 to 75% of sales. And IPCA is still to hear from the US FDA for their own 3 plants, which are under the US FDA scanner. They haven't heard anything from them, even in terms of a reinspection. The street is skeptical that whether or not they will achieve those financial targets that they've put out, and 2, whether or not it was actually necessary for them to pay so much for an acquisition. Remember, Unichem, we pointed out yesterday, has been reporting subdued margins as well as numbers. So one of the questions on the call, in fact, was that did you not scout for better assets? So they said this was the best asset that we've received in terms of a proposal to buy over the last 5 years. So that was something which, you know, there were a lot of concerns with regards to the price and the asset acquisition as a whole on the call. And that's really reflecting on the stock price. IIFL has also written on it. The acquisition has raised capital allocation concerns. The deal would increase IPCA's exposure to the inherently low margin, low return US export business. Remember, Unichem is mainly a vanilla generic US company. Deal is expensively valued at around 10 to 11 times FY26 estimated EBITDA according to IIFL. It leaves limited scope for disappointment going forward. They've revised their target price lower to 720, but they've maintained their at position on the stock. So as you can see, 3-year low for IPCA Laboratories.
All right, Ekta, thanks a lot for that 3-year low for that counter. But a lot of stocks doing well right now. We have Ambuja Cements, which has moved to the high point of trade from the broader markets. Container Corp has done well as well, has moved to the high point, and giving it company as Siemens, which too has seen a smart gain of about 2.5%. Most of them coming by in just the last 30 odd minutes. Take a short break, come back. We begin our commodities coverage. Manisha Gupta joins in with Rajiv Budharaja, who's the director general at Automotive Tire Manufacturers Association, ATMA, as we know it.
Blue, red, yellow. I'm a chameleon. It's my job to change color. But your wealth manager? Well, they shouldn't be copying me, you know. You know that, right? Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
घर रेंट पे देना है और ये अब तक ब्रोकर के पीछे पड़ा हुआ है और मैंने नो ब्रोकर पे बिना ब्रोकरेज के एक अच्छा टेनेंट ढूंढ भी लिया।
फ्री में घर लिस्ट करो और आपका नो ब्रोकर रिलेशनशिप मैनेजर सब देख लेगा। तो ब्रोकरेज क्यों देना? नो ब्रोकर है ना।
Friends, I want to share some good news with all of you. Firstly, like always, we have performed very well this time also.
But what will we get?
Secondly, we shall invest in employee benefit.
Come on, now tell us what will we get?
And thirdly, we shall invest in LIC's group funded plans.
Great, we'll get everything. Now, leave encashment, gratuity, and along with pension, our future is secure.
Yes, employees' real benefit lies in LIC pension and group scheme.
A. Balasubramanian decodes the investment space for retail investors and draws out the do's and don'ts on how to grow wealth by goal-based investing through mutual funds. Watch all this and more on Mutual Funds Sahi Hai. Give wings to your savings in association with News 18 Network at these times.
Whenever I had ice cream or cold water, I would experience a sharp shooting sensation. So I just kept ignoring it. Even my hot chai was giving me the same amount of discomfort. My dentist recommended Sensodyne. So now I can be completely carefree and sip my hot cup of tea. It really works.
अरे अभी तक मटेरियल आया नहीं? पैसे नहीं है। मटेरियल कैसे आएगा? अच्छा।
पैसे का आप भी टेंशन मत लो। यूग्रो कैपिटल का ग्रो एक्स ऐप है ना, अब आपको भी मिल सकती है नॉन स्टॉप बिजनेस करने की आजादी।
इतनी जल्दी?
Welcome back, and joining us on the show now is Mr. Rajiv Budharaja. He's DG at Automotive Tire Manufacturing Association. Mr. Rajiv, thank you so much for joining us. I want to talk about the prices first, where we are looking at the global rubber prices now trading at a 6-week high. The Indian rubber prices have seen support as well. There is lower production estimates that have been thrown in by the rubber associations, whether it's about Malaysia, Thailand or Indonesia as well. What's the sense that we have on the rubber availability in India?
See, rubber availability has been seen to be on the tighter side, especially in recent days and weeks. One, because of, this is not really, we have just stepped out of the peak production season. So traditionally also this is lean season. And secondly, I think overall the way the climate is playing out, internationally, Southeast Asia, as well as in India, it has impacted, because the number of hot days is increasing, the day temperatures are on the rise, and in the long run, yes, it is impacting both the productivity as well as the availability and arrivals in the market. So overall, I would say we are moving into a situation of a bit of concern on the availability side now that the tire the demand is looking up. So perhaps an imbalance there could be a point of concern for the industry, consuming industry.
Rajiv, I know it's still early days, but would you have a number in hand of what kind of availability or supplies or production that we have seen in India?
See, our production last year also, what was projected in the month of February and March for the whole year, that had to be kind of, tapered down 2 or 3 times, and we actually ended up with actual production. It was 8.10 lakhs or something, which was much lower than the normal production which was envisaged earlier. Rubber Board comes out with 2 sets of estimates, one a normal estimate and an optimistic one. So we fell short of the normal as well. This year again, projections have been made for 23-24, and based on last year's experience, we feel that consumption is invariably or in most cases higher than what has been projected, and consumption trails. The production falls short of the projections. So that is a matter of concern.
So if last year was 8.10, what are we anticipating this time around?
I think if on the basis of normal, kind of monsoon and overall climatic condition, we should be looking at something like 8 lakhs or so. We don't expect any significant, northward movement on that. Whereas consumption is definitely going to go much beyond 13.5 or closer to 14 lakhs this year. So you can imagine that the gap is only going to widen in this fiscal.
And what is the kind of tire demand that we're looking at right now? Because China, which is a major consumer of this, has seen tire sales in the previous month on the higher side. The automaking for the month of March has increased by 15% as well. So what is the global cues coming like, and what kind of Indian demand as well that you're envisaging?
See, China domestically is now picking up. Thankfully, because of the overall infrastructure spend now, getting percolated to actual schemes and projects at state level and ground level where things are moving. The CV segment is also seeing good traction,
Right.
Passenger, as it is, as we know, demand side is extremely good. There are supply side concerns which still prevail. So I think all in all, overall on the demand side, we see a very positive and encouraging sort of, fallout for the natural rubber demand. With even with this GDP growth of, about 7%, we should be looking at 5 to 6% kind of NR growth on a YOY basis. Whereas the production is pretty much stagnant as we have seen in the last 2 to 3 years.
So not such a great thing for the tire makers, clearly, as a raw material price and availability both increasing.
All right, not such a great news, but we'll monitor how it goes. I mean, a lot of people, whether it's EV or non-EV, all of them do require tires. Thanks a lot, Mr. Buddhraja and Manisha, for joining in and giving us the updates on that. With that, we wrap up on this edition of Halftime Report. As we take a short break, on the other side, you'll have Business Lunch. Take the market action for.